All right, so on to the budgeted balance sheet for that question. So balance sheet as at, it's the 31st of May 2018. And just my standard kind of 3 columns, euro on top. Right, so then into fixed assets. The fixed assets at the start of the period were 305,000, but don't forget you bought equipment for 6,000. Okay, so the 305 you had at the start of the period plus the 6,000 means 311,000. So this will just be a quick kind of simple balance sheet. You don't have to worry about costs and depreciation and net book values or separating out equipment. Okay, you'll notice it's just a total for fixed assets. All right. So that's 311,000. If you wanted, you could put in brackets after that it's 305,000 plus the 6,000. All right, just as a note. But you could do a separate working if you want, but it's a straightforward enough calculation. Balance sheet. So next thing is current assets. So what do we have? We're going to have our kind of standard stock. We're going to have debtors. And then my closing cash was positive, so that's going to be a current asset. So if that closing cash was negative, it'd go down on your current liabilities, your creditors within 1 year. So bank or cash. Stock, cash, debtors, fixed assets. There's nothing there. There's nothing else that's going to come into current assets. All right. So my closing stock on the 31st of May is expected to be 29,100. Debtors. So remember, the 81,600 sales in May will be expected to be received a month later in June. So at the end of May, that's sitting there as a debtor not paid. So 81,600. The bank or the cash, as I said, is just taken from here, 63,800. And if we add 3 of those, we're going to get 174,500. Next up then, creditors due within 1 year. You'll find in solutions these are sometimes just called current liabilities because it is just kind of a slightly rougher kind of balance sheet for internal use. It's not for publication, but we just stick with creditors due within 1 year just to stick in that habit. So what liabilities do we have here? We just had creditors and capital. Capital is going to go down further in financed by. So what are the creditors? Well, yeah, so similar enough deal to the debtors. So the 34,500 May purchases, they're going to be paid for in June. So they are creditors at the end of May. So 34,500. And that's it for your current liabilities. So 34,500. All right. So the 174, take away the 34,500, 140,000. You'll see they give that the working capital in some of the solutions. So then your 311 plus your 140 is 451,000. Okay, so that's like your net assets. Okay, so net current assets, net assets, or total net assets if you want. All right, so we're going to do then our financed by. And that is going to be the capital there of 400. We've nothing to suggest that's changed. Okay, so capital of 400. Capital of 400,000. And then remember, they told me the net profit for the 5 months is expected to be 51,000. So that gets added on to capital. So net profit 51,000, and if you add the two of those together, it's 451,000, and that's your capital employed. Two numbers match, balance sheet balances. All right, and that's your budgeted balance sheet done to go with the cash budget.